Morning, everyone. All right, so sent out the daily bias for today. Looking kind of for just a continuation move. I sent the ES chart. So you have this original consolidation over here. That seems to be the short-term target, at least for ES. And then for NASDAQ, order flow as of yesterday is bearish, trading back up into the inefficiency there, going into 7 a.m. and then dropping back down, looking for the current daily low, the sell side here, and then some inefficiencies lower if we can get down there. We do have FOMC meeting minutes tonight. It's around, I don't know what it is, 2 p.m. That's not the real FOMC, the big one, but still can have some impact in the morning, but not too much where I'm looking to completely skip the day. So we're currently bouncing between these two inefficiencies, one of the hour one time frame, and then this one as well on the H1. I'm looking for this one to be used preferably as an inversion gap, and we have multiple sell side targets that we can look to gravitate towards. And we have the -2, -2.5, and further prices lower. So that's kind of what I'm looking for today. It may just be a scalp. I'm perfectly fine with flipping my bias as well. But as we trade past around this swing high here, I don't really want to be looking for anything more than that. Like on the 15-minute chart, if I was to look for longs, it would just be up to the PM session high, and that's about it. Just kind of complete this market maker buy model, use the internal range of liquidity, and be done with it. But as of right now, we're seeing this price action come back up, fill this gap, start to print away from it. You have a tiny first presentation gap here. Now, this one is at 930, so you can't really use that one. You have this one in here. So as it trades up into this inefficiency, and now it trades back down, I want to see if it wants to hold the H1 PD array. So we just filled it both with buying and selling, and it should, if it wants to, stay within this pink box I have. On 15-second chart, you also see that. And then preferably offer a short opportunity as it displaces, re-enters, and then drops back down for the sell side we have marked out. So there's your gap. We want it to form a gap and retrace a little bit slightly into there. So you're looking at the gradient of the pink box. So we're just still watching price. Doesn't want to stay within the PD arrays you have marked out. There's this gap, the first presentation, and then the H1 sibi. So still staying within there. I can see all the candle buys are also closing a bit more bearishly. Watch the 5-minute chart over here as well. You can also refine down this gap we have. Oops. Crazy SMT on the 15-minute chart between YM and ES and NASDAQ. Got more interested in this SMT here that we have across these two. We do have slight SMT at the bottom, but since I'm bearish, I'm looking at the highs here. Unless we see some other sort of confirmation, then I'm not too worried about it. It's now starting to leave the inversion fair value gap. You have a change to say delivery here. Entering into the new sell program, you'd like to see it displace now towards the London low. Sell side here, sell side here. Trading back up into the bearish order block. I'm going to take a demo on this. We'll just let it watch for now. As it displaces through this swing low here, if it closes through there, you're not going to see any more retracements. You can see it's coming back up, trading to the bearish order block. Change the delivery. Now start to leave. Should start to leave the IFEG we've marked out here. Tag the London low and then close through the London low and then target the sell side we have down here. We'll probably continue into macro time, but here's your London low tagged. Your value up here on the 15-second chart as well. Like I said, I do want to see it work through the London low into this 1 hour sell side that we have, which is going to be a 4 hour sell side and daily sell side, I believe. No, just 4 hour. Then we have this larger gap. And then you could look for time-based liquidity after that. The only one I'm seeing after that would be all the way down here. Basically. So it's quite far. 9:30. Yeah. So this would be the next ERL. All the way down there. You can also use each one gap. These will all be consistent with daily targets. So you can see it didn't close below the line of low there. So it's energetically coming down, sweeping it. And if you see bisis start to form on this right side, I mean, trade through this, I would invalidate any continuous bearish price action. I want it to stay within this 5-minute IFEG as well as the 1 hour gap. And probably stay with below this change in state delivery too. So I'm not too worried right now, but notice the reaction of the almost balanced price range forming right here. Something you have to be mindful of. But without continuation, nothing to be scared of. And see, it closes past. Now I should start to use this as a reclaimed bisi. Meaning it should not trade back too much far above this. It can come back up and tap into it multiple times. But it should continue to use this as a selling point. So it's trading through the BPR there. Another indication of bearish price action. Should start to sink into the ELRs. There you go. And then you can look for the -4 and like in the other targets I had marked out, which would be quite far, but we also are relying on time. So it's currently 9:44. We're looking for our low to be placed after 10 o'clock. So we are trading within this larger inefficiency here, which is why I have not marked it out. I'm more interested in the PD areas have not been filled, so this gap and the sell side. I could leave this up if I wanted to, but as we continuously look for lower prices, I want very clean targets that are not filled already. So a gap that we're trading into that doesn't have any specific points within it is much harder for me to target. 10 o'clock here. I mean, we can go to the 15-minute chart and narrow something down in here. All right, you got like this tiny inefficiency here. But I'm not really concerned with the 15-minute chart in this case because it's a New York Open reversal. I'm looking for a low of day structure. And that low of day structure would be on the 1-hour chart. So you have your -4, -4.5 as target first, but the main one I'm looking at right now is this 10 o'clock. This is the short-term draw on time. It should be further in actually until 12 and 10:30, but this is our low-hanging fruit. Low-hanging. Where if I'm going short at 9:30 or anytime in here, this is what I want to be targeting in terms of the x-axis. So sure, you could take partial, but looking for 10 o'clock is the main thing that we want to be looking for targets in this case, right? 7 a.m. from the high here. So we know that it's a New York Open reversal by that classification. And then further in, we're looking for time and price to line up. So price was lining up here, but is that supposed to be the low of the day for bearish? Right here at 9:44, and we're going to expand for 2 hours? Most likely not. It's going to continue for 4 hours plus. So you look for 10 o'clock, then 10:30, and then 12. This is really the 12 o'clock is actually the main one you want to be studying on a New York Open reversal. That's like the, okay, perfect scenario, it goes to noon. Minimum scenario, it goes to 10 o'clock. The average, as we know, is around 10:30, and that fits within the session as well. So now you have drawn liquidity in the x-axis that needs to be lining up with a specific y-axis point as well. So in this case, if we reach our y-axis draw and it's too early, we're going to continue. Just like if we meet our x-axis too early, we're going to continue. If it's 10 a.m. and we haven't hit any sort of meaningful draw on liquidity, well, then we're going to keep going to the next one. So like I said, it may seem like it's far away, 70 points, or in this case, like 200, 300 points, but price will continue expanding until it's the right time to do so. So it doesn't matter where that draw on liquidity is. It could be 50 points, 100 points, 5,000 points away. It's going to keep expanding until time of day. It's a very useful skill because then you can actually exponentially increase your targeting capabilities because of the fact that you're no longer relying just on the y-axis. You're relying on the x-axis as well. You can see that change in state delivery there was used nicely as a bearish order block. Trades up into there, sells off. That would be all you need for the day. You know, I could be finished streaming right now and just you look at that. That's it. What more do you need? You know, I don't need to try and capture the session low. It's great if you want to continue to take this or take 10 o'clock or take all the way down to 23,148. But in all honesty, it's already done what it needs to do. Looking for a continuation move. Found an entry on the shorts after respected bearish PD arrays. You had SMT at the highs. That's it, right? And that's your entire week. It's as easy as that. So you don't need more. You don't need to do this multiple times a day. You don't need to do this multiple times a week if you don't want to. this entry and exit right here, that's all you need, right? And obviously we can be extending this further and further away, but that's all you need. And that's how easy it is, in all honesty. I'm not making it up. Like, you can take one of those trades a week and be completely fine. It's just in the beginning, it doesn't look like that's all you need. In the beginning, you want something sparkly. You want continuous trades, high to low tick. In reality, your job in here is to make money and get out. Not to be fancy, not to be flashy, not to be perfect. Just make money, get out. So we had a psych stream yesterday talking about kind of what you want to be shooting for and some pitfalls for psychological mistakes. But you want to make it as easy as possible. And I don't think that this entry right here is terribly hard to understand or see. Maybe outside of the time window that you may be normally looking for. If you like the macro times, then it's going to be slightly outside of it. But there's another target filled there. And you can see, what time is it right now? 9:50. So we're still, if we were to be bearish, we're still looking for 10 a.m. at a minimum. And you can see, just look how quickly it's dropping. Someone may be freaking out, why is it dropping so much? But if this is the next POI and then this is the next POI, you know, it's not going to just stop here or stop here. This is the nice thing about qualifying targets. If the targets are proper, meaning that's a potential target for the low of the day or low of the session, then it's going to go to the next one. It's not going to stop in here. It's not going to stop in here. It's just, it doesn't matter how far it is, right? Like in here, you can see how quickly it took out the sell side. There's no resistance point within here. Go to the next one. Boom, 70 points in a couple of minutes. If you close through here, boom, it's going to go to this one. And what can we rely on to see, is it the right time of day to form the low? We have no x-axis draw. Then this could be very well the low of the day. We don't know if we're going to take it off here or not. But now we're looking for any new continuous low. So low-hanging fruit. This is new low, needs to be placed at or after. But basically after. So, I mean, 10 a.m. is the minimum, right? The low-hanging fruit. This is the average one. This is the main juicy one. If you want to take the entire daily range, then you're looking for noon. But I mean, just look how nice the price action is. Get a re-entry opportunity right in here, 949, and it's going to sell off. So the 930 SMT doesn't need to be any significant high or low. Just follow the SMT into a SIST and then entry model. Right. Yeah. The SMT, the sweep, basically the turtle soup that occurs right at the start of that 930 session, does not need to be time-based liquidity. Preferably it is, but a lot of times you'll see it at the high of the day, or but it doesn't have to be any significant high or low. No, it could just be an internal range, fair value gap, or a swing high, swing low, and then you look for the way that I look at it is the time-based liquidity pools in that case are going to be used as exits, right? And in a perfect scenario, you're looking for an IRL move to an ERL move. So in this case, we're going from IRL to ERL. So that means the IRL in the beginning is either just going to be a gap or a short-term swing high in that gap that you could study for the SMT. If you're looking for time-based liquidity pools at the 930 SMT, you're trading more swing to Z than anything, or trading higher resistance, right? Because now you're getting a time-based sweep right at 930 or right at the opening range. Now what are we going to target? Probably go back into a gap. Could be counter bias, doesn't have to be, but if that gap is counter bias, well, then now you're struggling to find any good moves. So yeah, in the morning, right at 930, yes, exactly, 100%. Yeah, any pre-market liquidity pool could be, I look for a 15-minute swing high. Any sort of 15-minute swing high or 15-minute gap. That's all you need. So if I see a sweep on one of those, I see the SMT there, boom, that could be it. If it's London high at the same time, that's great, but it doesn't need to be. So yeah, sometimes you have a preference of, it needs to come up for a time-based liquidity pool high, and then you mark out the Asian high, which is like 40 points away. And then it comes up, sweeps this short-term swing high and drops back down. Well, then you're not going to get filled or look for an entry. But it's very easy at that point. You simply just look for, any sort of 15-minute swing high, swing low, and be done. So yeah, when I see it run up here, drops back down, forms a gap, respects the gap, and now starting to use a higher time frame PD array, as an inversion, displaces away, that could be an entry there. This is an entry here, another entry, and this is D there. All that is useful. Yes, sir, JKX. Love it. Accidentally clicked buy. I like it. Because the reason we were dumping so fast is because we were in the final stage of the market maker model. Yeah, of course. Right at the very last stage, right? You take the grading of this to 0.75 grading, boom, right there. You can go higher up into this. And if you want, you can look at even more further targets. We got daily low here, another daily low here. Panicked hard. Yeah. Sometimes I'm on NQ and not on MNQ. So that's why I think I'm just getting too old. I got a whole checklist I do in the morning. Making sure my risk is proper, making sure my chart is on the right one. If I want to trade NQ, I'm on NQ. If I want to trade MNQ, I'm on MNQ. Making sure, yeah, all that stuff. Yeah, no, I don't think definitely don't have ADHD, but I get hyper focused. Sometimes when I'm about to trade, or even actually when I know I'm about to do something stupid, I get hyper focused on like that one idea until I just dwell on it, and then I make a mistake. Oh, well then. Yeah, then Snyder's got a hypertension. It's not real. I probably do have ADHD. Who knows? I feel like we all do at this point. All right, so we're still 4 minutes ahead of schedule. So we're gonna mark on more ERL targets here. I actually could start to fib project a bit further. Yeah, it's still pretty far. Nice, Zoro. Got nervous and TP'd. It's not a good reason. I do like the trade though. Nice 6R. Exactly. Made up for 2 bad days. Love it. Perfect. No. If that's technically yes, that's kind of what I'm looking for, but absolutely no reason to not take a partial there. So if that's your line in the sand, you're like, that's my TP. Don't be worried about the extra parts that you could be holding it for. You know, if that's a regional sell side, you're like, that's where I want my take profit, take it there. But yeah, maybe next time, 80% of it comes off there, 20% holds for 10 o'clock. And you can try it and see. 10 o'clock, 10:30, and 12. No, I'm not going to go too in depth about it because that's the PDF, but they are all specific drawn times. There's ways you can calculate which one's going to be used, but the main ones that you're looking for is 10 o'clock and then 12 o'clock. And yeah, 10:30 is kind of thrown in there, but using DTT, I don't know what DTT is. Um, 10 o'clock after it forms any sort of new low. No, I'm not using digital time theory. So like in this case, El Zorro, right at 10 a.m. if it's up here, that's not a new low. So it needs to be forming a new low past this, then that would be count as draw on time. And the reason that we're looking for, I'll explain the 10 a.m. one, but I'm not going to explain the 10:30 and 12. I'll leave that up to you, but 10 o'clock is an important key time. Number one, because it's the start of the London close session. So in Forex and even in futures, it follows the same exact protocol where you have one of three profiles: classic London protraction, New York open reversal, or swing to Z. So in a New York open reversal, you see that London kind of creates a consolidation range, London open that is. New York manipulates that and forms the high. And then London close forms the low of that expected daily range. And the London close is between 10 o'clock and 12 o'clock. So on any given day, that's normally the time range that you're targeting. But depending on if you're going to be earlier in or later in, then you know, okay, where inside of London close on the x-axis are you going to be targeting. But then you start to look for key things like liquidity pools and fair value gaps that should be lining up with London close. So any sort of day that you're trading, you should be targeting that 10 o'clock to 12 o'clock session. Now, if we're digging in a little bit further, if 7 a.m. was to form the high in here, right, it's not London open, well, then we're expected to go probably further into London close than just the start, right? It's not going to just do this a lot of times. It normally will continue further into the session, so it's a little bit symmetrical in time and price. CJKX, take care. Easy dub, and now you're done. But yeah, so this is the start of that time, and then 12 o'clock is the end of that time. There's times after that as well, but that entire window is where you want to see the low of the day form or high of the day form inside of a 15-minute or hourly PD array. So like in this case, here's 10 o'clock. I'm not going to just take one off here because it hit 10 o'clock. You know, I'm waiting for the new low, which would be here after 10 a.m. And since this liquidity pool is already tagged, technically you can look for this one after that. This would be like a time-adjusted DOL. I got a whole bunch of lines on the screen right now. Clean low cells, yes, sir. Exactly. Wrong time to put in the low. But here, I'll pose a question to you. This is for those who are studied a little bit, or maybe you can think outside the box. When would it be reasonable for that low of the day to be formed before 10 a.m.? And what would that tell you potentially about what you're reading? So when would it actually form the low right at this time? You say you put it in here, 9:56. It's a good guess, not news. Anyone else got a suggestion? It would be when you are bullish. So if I were to see the low of the day, say it tags out a south side liquidity pool, and then on the 5-minute chart starts to displace away in the form of 5-minute changes to day delivery, I'm instantaneously thinking that my bias is incorrect. Because of the fact that if it is now placing in this low prior to 10 a.m., and maybe I see a higher time frame PDR being traded into, potentially there's SMT, potentially there's a 5-minute change in day delivery, all those things pair together, obviously is telling me something, not just the one thing in itself. But now I'm starting to look at, is that low the low of the session and actually the low of the day? And now we're going to expand into 12 o'clock and, further into London close. Because when we know that for the session, if I'm bearish, I do not want to see that this low is formed during opening range and we have a 5-minute SISD here, right? That's telling me, okay, if I see the low of the day form before 10 a.m. and then we started to displace and start to hold PD arrays on the way up, you can flip bias off of that. It's a very useful thing, which is using time. You understand how time of day prints for the session and for the day. It's repeatable. It is the independent variable out of the market. Price is dependent. Time is independent. It always functions at the same time, same every day. There's definitely variations. It's not going to form the same high and same low every single day. Otherwise, it's too easy. There's variations, there's rules, and there's consistency. And that consistency can be found just based on the economic calendar and how the days are printing. So 100% for me, if I do not have the x-axis, I cannot trade. Simple as that. If I do not have, I mean, I could maybe trade some regular supply and demand or some random stuff, but everything that I do is based off of the x-axis first. So bias, you can flip bias based off of where the low, the high is being formed at. If you don't understand the importance or potency of that, it'll come to you. But for some of the people, the fact that I mentioned, okay, if you can flip your bias based off the low or the high being formed at a specific key time of the day, that's game changing. You know, same thing with targeting time of day. It's something that, at least for me, I've never seen anyone explicitly talk about it. So that's why I get naming rights. So I call it DOT. But it makes complete perfect sense, right? So here's a perfect example. You have 10 a.m. This low is here formed at 9:56. We're not bearish in any, or we're not bullish in any case for the bias. And we can kind of confirm that with the fact that we have meaningful displacement through multiple bearish PD arrays. So there's no reason to look at this as, oh, are we bullish because the low was formed here at 9:30? Do you see SMT? Do you see any willingness for it to move higher? No. So as it trades back into an efficiency and trades back into a fair value gap during the macro time, that would be an entry and that would be your exit right there. So now you have another entry to exit opportunity. And there's your new low formed post 10 a.m. on top of a liquidity pool. Now you could argue flux, this liquidity pool is already tagged there. Sure. So now you could look for this one and time of day. This would be like a time adjusted DOL. This is also our low hanging fruit, right? Because 10 a.m. is our low hanging fruit. So this would be like a time adjusted DOL. And then same thing with this one. This would also be time adjusted, meaning anytime after 10 a.m., if we were to hit these liquidity pools, that should be an instant partial. So basically, meaning if it were to tag this ERL here, that would meet the earliest requirements for the low of the day to be put in. Earliest requirements for the low of the day put in. The low of the day is not just put in because it feels like it, just because it's put in at the standard deviation. Standard deviation is part of it. You have time requirements. It's like a checklist. It goes, okay, does it meet the time requirements? Check. Does it meet the price requirements? Check. Is it far enough? Check. You get all those, then you have the low of the day. Don't have that, it doesn't count. So that means these are partials, right? Partial, partial, partial. Why? Because they may meet the price requirements. Some of them don't even. Like this doesn't even meet the requirements for an exit because we just traded from a gap. So we're not going to go from gap to gap. We're going to go from gap to liquidity. So sure, this is a partial opportunity. Same thing with this one. Because of the fact that, sure, it meets a price requirement, but it doesn't meet their time requirement. Therefore, 90% of the time, that's not going to be the low of the day. So the way that you get high of day to low of day is you understand time. So, okay, you understand that 9:30 is going to have this manipulation. So you get in there. That's pretty close to the high of the day. And then if you want to capture the low of the day, you want to be looking for exits that line up with both of that. All right, so if you see my exits on the stream trades and those ones where I'm trying to take the high of the day, the low of the day, or the session, those exits, I'm pretty proud of my exits, but not too much about my entries. The exits are on the swing highs as they're forming. You know, and that's based on time and price, like this one in here. Like I can't even screenshot it. This one was a little bit further up on the move in here because I waited for 9:30. So buying it at 9:30, basically low of the session to high of the day. And this high of the day exit up here, right to the tick, is based off of time first and then price. Right? Otherwise, why am I not taking it there or there or there or there or there? This one. And this is 1600 right here, and this is post market. So that's the high of the day. So right here, now you have time of day lining up at the minimum, and then your exit price at the minimum. So this would be a very good partial opportunity right in here. / full exit opportunity. Right in there. And now you have a macro entry, boom, there to there. You have this, right? What would that give you? This is what I'm talking about. It can exponentially increase your take profitability if you understand where, the dynamics of the session. What is it likely to do? You look at that SysD entry in here, and now drag it down. That's potentially your entire monthly P&L. I outlined the entry, I outlined the exit. Sure, of course you're taking partials as needed, but you're extending that last exit as far as you can. And then, okay, now when either your muscle is getting tight, basically you don't have the mental capital enough to hold it any further, or it's met the requirements, you close out. Right, so in this case, this is all you would need. I could very well end the stream here, and that would be it. Now, 1030 is the one that you prefer, and this one is the one that you are looking for perfection. But for those who are just studying time of day, and maybe you're just holding longer and longer trades, you just want to study 10 a.m. first. It's the very start of the London close. Okay, then at that point, anytime we form a new low after that, you can take a partial there if you want to. That's 100% reasonable. But in order to hold longer and longer trades, you have to treat it like the gym. You start with the 5 pound, then the 10 pound, then the 15, then the 20. You don't just take it from entry to exit and hit a 12R off the first trade. You can see all these are hourly DOLs. Potentially, actually, even the weekly low may form down here. A beautiful PA. So now, but to me, that the ability to qualify DOL is what we talked about in the stream a couple of days ago. If you've not checked that one out, it's a very good watch. It is the August 16th, 2025 NQ market review. I'm going to post the psychology stream from yesterday as well. But yeah, to me, the ability to just know, okay, it's going to keep going. There's no doubt in my mind when to close out a trade or if a closeout is good. If I just take it from here to here, that's a scalp. August 26th. Slander's in here. Can you forward the file? But yeah, otherwise you're gonna be left with 2 to 1s, 1 to 1 every single trade. The goal is to shoot for a 40% 2R, but then on the trades that you can extend, you extend them as much as you can. Okay, my average is not a 10R. My average is not even probably a 5R. My average in terms of a winning trade is probably around 3 to 5. But some of the trades I can extend to, the most recent one was 13. So on those trades, it's exponentially increasing my my P&L curve. And then when you take a loss, you don't have exponentially high losers, right? You take your loss, boom, you're done. And you're cutting risk probably for the next day. So in that case, you are doing exactly what your P&L and your equity curve needs, is stopping the bleeding when you're going down and then shooting up as you go higher. And your P&L curve eventually will look like this, and actually this becomes steeper and steeper. It's an exponential increase. Take care, Tiewags. Hopefully see you tomorrow. And then once you understand the numbers of it, once you understand the RR, yeah, you're right. 16th. But once you understand the numbers of it, you just execute relentlessly. I said yesterday, there's no room for thinking. It is just act. Yesterday I took a payout. So today I still have a job to do, you know? There's no, it's not like you get you get to take time off or you get to, I took a payout yesterday. I'm back to work today. There's no changing of anything. It's just work. So if I can get an entry today, I'm going to take that and then potentially not work Thursday or Friday. There's no gaps. It's just, you find out that that's why you don't even shoot for P&Ls, because you find out that every single day eventually just becomes the same. You either don't take a trade, you lose on a good trade, or you win on a good trade. There's no difference. There's no variation. There's nothing new or fun. It gets very boring. But it's peaceful because you don't have to worry about anything other than your execution. So it gets boring, but you know what to do and you know your job, and you'll never blow up after that point. You just constantly print, and every single payout gets bigger and every single loss also gets bigger, but less percentage of your account. Right? Eventually your risk triples and it's only 1% of your account compared to 20%. So I'm expecting probably at 10:30, as long as we get this continued range expansion. Anytime you have a continued range expansion for the first hour, so between 9:30 and 10:30, where you have a consolidation at the end of the range, a external turtle soup, and then a retracement back to TGIF range of the session. So if you see this larger range expansion, typically around 10:30 of this consolidation, it sweeps the low, turtle soup, and you come back up into the range coming into 10:30, either into TGIF of the session, or if it wants to really offer a re-entry opportunity for the PM session, it'll come back into premium. But typically you just look for TGIF of the session. So I'm expecting that coming into the rest of it. We already covered an entry model here, entry model in here, different exit opportunities, and I've outlined for you what we're looking for in terms of the rest of the day and rest of the session. So 10:30, 12 o'clock, and then if you want to, you can get further and further DOLs as we go down. But I'm going to wrap up the stream there. I don't want to keep it too long, and we already covered basically most of what today was. We'll probably do a market review later today as well. So if you got any questions or anything, then let me know. But this will be posted right after I upload the stream from yesterday. So when this stream finishes, I'm going to upload the psych stream, and then I'll upload this right after it. So you can expect both to be here by the end of the day. All right. So take care, everyone. God bless. Make sure to journal and do the things that are necessary to succeed as usual. And I'll talk to you guys very, very soon. Peace.